What's up, y'all? It's your boy Thomas from SMB coming at you with a fresh, hot new take on what happened today in the stock market. Um, yeah, it was another bloodbath today. Uh, or just, I don't even know. I mean, really no news today, but wow, everything went straight down. We got some crazy selling in the major indexes. SPY down 3.25, Nasdaq down about 4. Um, and yeah, it's just craziness out here. I don't even know where to begin. We have Apple finally selling off. They're not helping anyone. So it just looks like more blood. Everything's the same. Economy sucks. Inflation sucks. Um, yeah, it's crazy. So it seems as if there is more blood to come. At least for tomorrow, I would imagine. I'm not sure, but today we have a lot of blood, so it's tough out there. Um, just no buyers whatsoever. A complete risk off. Everyone sold. Everyone. I mean, and I don't blame anyone for. I'll blame anyone. Like I'm gonna blame the fucking hedge funds. But like it's. You look at the market for the past 3 years, and it's like, yeah, of course people are gonna take profits. I mean, you look at Apple. This is all Apple's come down. Shit. You still made money. If you bought Apple this time last year, you're still fine and green. So there's still a lot of meat left on the bare bone to rip us down a little lower. SPX dropped. We lost 4K. This is the first time it's broken 4K since about this time last year. Um, and yeah, I think that kind of just paints the whole picture. We're looking like we're at the edge of the cliff and we still haven't jumped off. I mean, I just still don't think this is panic mode yet. This doesn't feel like panic selling. There's not true fear yet. Um, it's just a slow meltdown, a slow burn, a slow just a complete sell off. Nasdaq, we're at our lowest point since about since about October. No, since about the start of the year last year, or about the end of 2020 on the Nasdaq. Um, so yeah, if you we could talk a little history historically speaking. The last major pullback we got the last time, besides the see, I don't even talk about. I mean, COVID, the fake COVID crash is such an anomaly. No one's gonna look back at that and call that a recession. It was just a freak out because it was literally unlike anything we'd ever seen. A virus out of nowhere that was super contagious. No one knew if everyone was gonna die. No one knew if the entire economy was gonna shut down. So it was just a complete panic, not really based on fundamentals. The economy was like strong, super strong right there as COVID started. So it was kind of just a pause on the economy. And then we got our free money from the Fed, our zero interest rates, and that resumed the strong economy, already strong economy, and catapulted it even further. So the last good example, I would say, for a actual pullback would be 2018. And now in 2018, let's have a look at 2018. Inflation data in 2018. So unlike now, in 2018 our inflation rate was 2.44, which is fantastic. That is right where you want inflation to be. And the only reason we got this pullback in SPY that time was because the Fed was like, all right, the Great Recession's over. Everything's back to normal. We're going to start raising interest rates. And what did the economy do? It tanked 20%. So that was basically all that happened back then. So take into consideration, there was no bad inflation back then. There was no war in Russia. The gas prices were stable, but not completely insane like they are now, or war in Ukraine, I meant. Yeah, it was literally just interest rates, and it was just a freak out, like, oh shit, they're raising interest rates, a bit of a sell off, and they were also selling some of what they bought up in 2008. So that's what happened then, and then they actually, after that, let's look at this. All right, so here we are. What happened then? So they jacked up interest rates, and they jacked them up. They raised interest rates a measly 2.5%. That's how much they raised them, and that caused a 20% pullback in SPY. A 2.5%, not because of inflation, just but they had to slow the economy down because they saw the rate it was going at back in 2018. It was very strong. They saw that that rate was unsustainable, and their entire thing about the economy is not just to make sure it goes straight up, but they want it to be sustainable because you have an economy that just goes straight up for 3 years, it's going to crash. So they just wanted sustainability, and so they saw the market pull back, and then they actually eased up on interest rates right here halfway through July or through 2019. They started lowering the interest rates back down because they were also selling off their bonds. So usually, and that's the aggression of the Fed this time around, is usually if the Fed is holding a bunch of assets and they're going to sell those assets off, they don't jack up interest rates at the same time because that can rug pull the economy. That's what they usually do during a healthy economy. Now, now they're sitting on $8 trillion worth of bonds that they have to sell off to somebody, and they have to jack up interest rates faster and harder than they have in like 40 or 50 years. Or no, like 60 years since like the 70s. Obviously, we're never going to get back to this. This Volcker back in the 70s jacked up interest rates at 20% and literally, yeah, just forced a recession back in the early 80s. So we're not going to do that ever again. I'm not worried about that. But see right now, we're at a measly 0.83. Wow, we jacked up interest rates. So typically, if they try to do both at the same time and they see it ruins the economy, they will ease up. But they have no choice. They cannot ease up. Inflation is so bad, they have no choice. They have to sell off what they are sitting on, aka stop buying everything, turn the money printers off, and actually turn the money printers into money burners and burn that money, basically, and then jack up interest rates very aggressively. So, all that said, this is not the economy. You're not in the ideal economy to handle such an aggressive Fed. We have still really high consumer spending, but the supply side is basically a huge chunk of the issue. Why is it so dark in here? I'll turn a light on. So the supply side, the Fed can't control that. The Fed can only control demand, and that's what Jerome Papa Powell, JP, J J Pizzle, that's what he was talking about. Is that here at the Fed, we can only kill demand. He never says that. He's like, we can only lower demand. We can't do anything about the supply side. So never mind the fact that interest rates are going up and the cost of producing anything is going up and labor is going up and productivity of workers is going down and wages are going up, but not up enough to catch up to inflation. And then add just inflation into that big shit stew, and this is the economy you get. This is where we're at. So right now things are great, and that's always how it is. It's always, I mean, back during the Great Recession, like things got the stock market sold off in 2007, but things didn't really hit the fan until 2008. So that's how recessions are. It's never a huge, it's a gradual thing, but the stocks are forward thinking. They know that the price of housing is only going up. Wages are stagnant at best. Inflation is going up. Cost of energy and food going up. They know this consumer spending is not going to go on forever. So we're seeing that euphoric spending that is always happening right before recessions, which is still happening to this day. We're seeing that slow down slightly. And Amazon showed that in their earnings. Lots of companies are showing that in their earnings, that consumer spending is coming down slightly. So we're seeing the first sign of that. Clearly, middle class is going to have to tighten their belts. People are, and just add into the fact that Americans are really stupid about saving their money. They're not going to just abandon the 2021 Toyota 4Runner that they pay $1,200 a month on its payment and put 0% down. They're not just going to take that to the dealership and trade it in just because their inflation's a little bad. People are dumb like that, and yeah, you factor that in, not a pretty picture. So that is kind of where we're at right now. That is where we at. So I'm just gonna go down some of the. It's like every day I look at my small cap watch list and my jaw just drops. So we have DraftKings down to $11. It dropped 16% today. Yep. Square 13%. SoFi dropped 7.5%, and then another 7.5% after hours because of this one. This one I could not believe it. Upstart, $43 a share. It has dropped. Weeble, you piece of shit. I think that's about 43% that is dropped. It just had earnings that were not good. Not terrible earnings. But yeah, it's down about 45% after hours. 45% Upstart. 45%. This thing was $400. It has dropped 90%. Almost. Right? Yeah, that's 90%, right? God, I'm so bad at percentages. 401 to... Yeah, that's about 89% that Upstart has dropped from its all-time highs. 89%? Wow. Just shocking. I mean, just name a stock and it's down like 10% today. ChargePoint, sure, 10%. Blink, about 15, 13 and a half. Plug, yep, 14. I mean, Skills, oh god, yep, down there, 12%. Just about every SPAC closed down 10%. Open, 10%. It's shocking. There are literally no buyers out there right now. It is just absurd. I cannot believe it. Uh, it's shocking. Oh, Roblox. Yeah, Roblox is RBLX. 12%. It's craziness out here. It's very discouraging as a bullish sort of person. Oh yeah, let's don't get me started about Bitcoin. Coinbase 20%. I mean, these stocks are just dropping 20% off their entire market cap as if just nothing. MicroStrategy 25.5%. I know Michael Saylor's he's levered to the tits in Bitcoin, man. He's gonna get fucking margin called if Bitcoin doesn't reverse. And speaking of Bitcoin, oh god, Bitcoin. I don't even want to talk about Bitcoin, man. Fuck me. Bitcoin, we're down 10% on the day. We're gonna lose 30,000 on Bitcoin. 30,000. Bitcoin has been below 30,000 since I guess only July last year. But if we lose 30,000 and drop like below 28, oh, oh man, how many people do you think bought Bitcoin? I mean, what percentage of Bitcoin's owners are new buyers within this time period over here? I would be willing to bet probably like shit, like half the people that own Bitcoin now, and they're just gonna get their asses completely handed to them. I mean, I know Bitcoin's culture is like just hodl through everything, so it could survive, but man, it is not a risky asset market. It is sit on cash and buy the fucking try to wait for a floor and buy that. But yeah, it is shocking. Bitcoin is down 10% today. And I saw that coming. I mean, uh, I wasn't gonna short it, but this is just like a textbook bear flag. Like at the bottom of a huge sell-off, it starts having this up ascending channel and breaks out of it. And yeah, that's why these setups work, because once it broke out of it, they tried to hold it. It bounced off it once, bounced off it twice, and then third time's the charm. Gone. It's brutal. So, um, yeah. Just not really sure what else to even talk about. I mean, Wednesday we have CPI data coming out before the market opens. Just pray to God that I mean, maybe this could after being so wrong about the FOMC, like I was so after we got that rally after FOMC, I was so convinced we were gonna get our bear market rally, but we just did not. Um, we got our rally for about 2 hours and it got sold off in the hour of the next session. So that's where we're at right now. This could maybe be pricing in shitty CPI data. And even if CPI data comes out terribly, we might still get our rally. It is just a catalyst market where like random catalysts are the only things that really move things to the upside. But everything's just willing to go straight down to the downside. I mean, this is just absolutely shocking, just mind blown right now. I really can't. Unlike anything I've seen, honestly. I mean, and just look at the volume. The volume is just like, just staggering over these past three sessions. Just absolute, just no buyers at any level, man. It's so crazy. So, I'm looking to see if SPY can hold like 395. Below that, I think we'll see 385. Um, we'll get a bounce. These bear market bounces, they happen fast, but I'm just dying for a bounce. I want to short everything really badly, but I can't short when SPY has been doing this. Like it just on a fundamentals basis, it has to bounce at some point. Look at this weekly RSI. The weekly RSI is the lowest it's been since the COVID crash. So we're almost oversold on the weekly RSI. That's something else. That's actually insane. 10-year. Let's see how often that happens. So yeah, the last time it sold off this hard was back in 2018. First interest rate hikes, super fucking dovish interest rate hikes too. So then take everything back, blank slate. So 2018, we are not back in 2018. The market still had some sense to it. There was no, it wasn't just free money going around. The Fed wasn't just literally pumping dollars into the economy. It was free interest rates, so debt was pretty free, but we did not get this absurdly overpriced meme market that we're in right now. And it was not a market where tech was the huge weight of it. The other companies still had like big market caps, but this market is all about tech. So tech is feeling it the most. So back here, riddle me this. It's hypothetical. So everything's good back in 2018. We're in a normalish market, and we still pulled down 20%. 20% down from a normally valued SPY off of just interest rates, not inflation, not a war in Russia, not supply chain issues. So that is how much we pulled down in a normal market on just interest rates. We got our first bear market since like 2013 or whatever. Um, bear market by SPY went down 20% for like a week and then it bounced. So now, fast forward to today, we have a SPY that is way overvalued. Look at this. You can just look at it. You can just draw a line. I mean, this isn't rocket science here. This is not rocket science. I will just draw a line, about an average line going through this uptick. See, look at that. I mean, even this is a little generous. Just look at this. Look at the fucking. Just look at the degree that's going up. I don't even know degrees, but it's going steadily. It's going steadily up. And then fast forward now, you draw a line from what SPY's been doing, and look how much higher. Look at that. The degree is like it's like going up to 2 o'clock. This was going up towards like 2:45, but this shit is going up to like 1:30. If you're like looking at a clock, you know, holy shit, or going up towards 1 o'clock. Like it is just going way too straight up. So I know, real scientific analysis I have, but that just shows you how. So yeah, if we were in a regular market, we'd be pulling down like 20%. But considering we've been in a meme market that was caused by the Fed because of their ridiculous quantitative easing and their ridiculous money printing, um, you gotta be thinking. I mean, a 50% pullback is absolutely on the table. Like it's not now, not this next month, not even this next quarter, but by the fall, winter time, at the rate we're going, things are not going to be looking pretty. It takes time for these things to flesh out fully. So in the meantime, I'm waiting for that rally. But considering SPY can get a 20% pullback like it did in 2018, just based on the interest rate hikes, nothing else really, a strong economy otherwise, but just a 20% interest. Now factor in that SPY is already 20% higher than it should be on a fundamental basis, and it's still overpriced, even though now it's pulled back almost 20%. It's pulled back like 17%. So we haven't even like, I mean, there's just I don't know how anyone. I watch people on CNBC. They're up there like we're looking like a floor might be in soon, and it's just like how can you even say that? Like what goes up must come down. It's just like common sense. You cannot just sustain this level of growth forever. Like it's completely unsustainable, and now we're paying the price. I mean, Jerome Powell just he pumped it, and all of his friends got rich, and he probably got rich too. And now they don't give a shit about the stocks. I mean, they're not gonna they aren't beholden to the stocks anymore. They all made their money. They're ready to fucking rug pull that thing and get back in. So because they don't want their fortunes to go to worth fucking nothing. Like they don't want that inflation eating away at their profits. And yeah, and then you got to factor in the fact that how many people we've had a 13-year bull market since the Great Recession. How many people are gonna sit through another recession and not take profits off the table. I mean, not everyone's like a Michael Saylor who just doesn't ever take profit on Bitcoin, or Kathy Woods. These people that run these hedge fund, they get scared too. They're humans too. They see what SPY's doing and they're like, we're taking our profits. We're not gonna just wade through a recession and just watch our cash flow go down. Or not even that. They're not even just gonna take their profits and go cash. They're just gonna short the hell out of this thing. I mean, come on. They want money too. Citadel reported they made like 15% profits or something last quarter. They're shorting the goddamn shit out of SPY. The biggest hedge fund in America is making 50% profit on this huge pullback. Like, what do you think they're doing? Gee, I wonder. They're not just waiting for bumps. They're shorting the every living shit out of this. And these companies, these hedge funds now have more money to short the economy than they ever have. And they know people, and there's more dumbass retail traders in the market than there's ever been, holding shit like SoFi and Tesla and all these just, and they're in there with margin too. And these hedge funds know they start margin calling these people, and it is just an absolute fire sale. We can see Tesla drop another 30% in a fucking like that in a month. I mean, it's staggering. It's just I don't know. I don't love being Mr. Doom and Gloom, but it is just, you see selling like this, you see shit like Upstart down that much. It's down 90%. It was at $400 fucking dollars, and it's down 90%. Now it's got a big old fucking head and shoulders too. There's a shoulder, and a head. It's breaking that neckline now. Dump. Wow, that was actually a pretty money short. I hate that. Fuck, dude. I always miss. I mean, yeah, that was an easy short. This, you can actually short this on Thinkorswim too. Now you can't. Yeah, now it went to hard to borrow. That's what always happens when these things tank like 50%. SoFi used to be easy to borrow too. Just ridiculous. Absolutely ridiculous. So, yeah, I just need to not get crazy bullish. I know it's gonna happen. The bear market rallies can be just insane. Just we can get like a 4.5% day from SPY coming up someday. Like this shit just happens. It'll be fast, and it's not. You just I just cannot see that and be like, oh, things are good. We're back to normal. It's just got to be, bear market rallies are insane. They will always be insane. They can be insane. It's just a time of high volatility, and I just need to be prepared for it when it comes and get the hell out with my profits. And honestly, I'm ready to go short. I don't think SPY coming down only 18 or whatever percent is the price that we are gonna pay as an economy. There's just no way for the mass destruction we've done to the middle class. Uh, yeah, so there's that. Um, yeah, we'll see what CPI data looks like on Wednesday. Tomorrow's gonna be probably a little choppy, so I'm going small size. I went pretty small size today, but yep, that's another day here at SMB. SMB stands for super bearish. Uh, JK. But yep, that's my little update. That's where I'm at right now, and we'll see what the rest of the week brings us. Who knows? We could rally by the end of Friday. Anything can happen. But yeah, that's all I got. Peace.